I was asked to speak at a conference recently in India, and as part of my preparation wanted to get some idea of the equities markets in India and how they look relative to the rest of Asia and the world. This would ordinarily take me quite some time, even for someone like me that has access to market data from all around the world. In fact, I was able to complete the overview in a little over 5 minutes using the market quality dashboard. I thought I'd share my experience and show you how big data can be harnessed to better understand issues like which Asia-Pacific market is the cheapest to trade in. To answer this question, I opened the web-based market quality dashboard and ticked on global venues and added 7 markets to the venues and indices area. I first chose 2 main Indian markets. I then selected 2 years of data for the comparison, financial year 2012 and 2013. I then chose effective spreads as my measure of transactions cost. This measure is a standard estimate of the cost of demanding liquidity in a marketplace. This is one of 2 elements that represents the major costs of doing business for typical investors, the other being brokerage commission. First thing of note is the major difference in the cost of trading on the BSE. BSE trades around 15 basis points and NSE approximately 6. The next thing I did was to identify a couple of comparators from the Asia Pacific region. I chose the Australian, Hong Kong and Tokyo markets for that purpose. It is immediately apparent that while ASX and BSE are comparable, Hong Kong is more expensive than all the other parties, but again, National Stock Exchange very low by comparison. Finally, I added London and Nasdaq representing European and North American exchanges. The result is fascinating. The National Stock Exchange of India is as efficient as the most efficient markets in the world, well ahead of its Asia-Pacific counterparts. The question, of course, is what explains this, especially given the difference to the Bombay Stock Exchange, which trades many of the same securities. Watch this space for the answers, and in the meantime, write in and tell us your answers.